All right, welcome back to the Know Your Numbers REI podcast. This is your host, Chris McCormack, founder of Better Books, where it is our goal, our mission, our purpose to help you, the American entrepreneur, investor, business owner, eliminate the frustrations and the chaos and the anxiety that comes with taxes. Not just taxes, but accounting as well. It's all a big puzzle, and if one piece of that puzzle is missing or off, the entire puzzle can't be completed. And around the topic of taxes, the completed puzzle looks like you having peace of mind, you having a low tax bill, lower than you might be experiencing right now, you not having the stress of taxes hanging over your head year after year, quarter after quarter, month after month. And so a lot of it comes down to just not applying certain strategies, but other parts of it is just not having the right systems and processes in place to know where you stand on a regular basis and to know whether you're getting all the deductions available. And that comes from quality record keeping and being able to say on a regular basis, this is how much money I'm spending on this topic or this category or on this line item. And so that's our mission, is to help you in that journey of eliminating these frustrations and paying less in tax and keeping a well-organized and well-run machine that is your business. And finances are a big piece of that puzzle. We meet with hundreds of people every year, and we know that not everyone fully understands the finances. Not everybody wants to be involved in the finances. And so that's why we consider ourselves an extension of your team, doing the things that a lot of people don't want to do. It's kind of like when people don't enjoy cleaning their houses, it's one of the first things that they outsource. They get house cleaners involved to make their life easier, free up their time. And so that's what we do on a much larger scale, being involved in the businesses and the finances. Today, we're going to be talking about an instrument that is tax advantaged when used properly, and go into the ins and outs and some of the case studies that we have available and talk about some of the things that you should be aware of. If you are joining us for the first time in a while, we have recently done recaps on the Big Beautiful Bill, which is now the law of the land, and we are applying some of those strategies and things that are available to taxpayers on our clients personally. And so if you are trying to get some insight into what you need to know, I would encourage you to go back to the last 4 to 8 episodes. The first 4 in that category were pre-law, pre it being passed, and then the next 4 were now that the bill has passed, now that it's the law of the land. Here are some things that you need to know. All of it can be valuable. Some of it is not as relevant. QBI, for example, I think we did that before the bill was passed, and they were talking about it being 23%. It is still 20%. If you're wondering what the heck QBI is, then that's an episode you want to be listening to. Yeah, without further ado, we can jump into it. I didn't talk about qualifications, but I'm a CPA, I'm a certified tax planner, an MBA, and that's why we started Better Books, is we found that a lot of people were missing out on tax savings because they weren't planning. They didn't have somebody who met with them around the year, around the calendar, to say, hey, have you considered this? Hey, you have this much in income and only this much in expenses. This is how much you can expect to pay. If we did this strategy, we could pay $10,000 less, for example. And so that's what we do. And we have the qualifications to do just that. But let's get into it. Let me ask you something. When you hear the word insurance, what do you think of? It's probably very similar to when you hear the word taxes. It causes you to be stirred and have an emotional response to just something that comes up in conversation, right? People don't like to think about insurance. People certainly don't like to pay for insurance because it is one of the higher line items in our financial lives. You will pay more in taxes than you pay across any other in your finances throughout the course of your entire life. So taxes are number one, the most expensive piece of your financial pie. Then there's interest on mortgages. I mean, some people pay interest on credit cards, so interest is up there, and insurance is in the top 3 for sure. And Americans are one of the most insured societies in all of current societies and all of history. We like to have that peace of mind of insurance, whether or not we're actually going to use it. People are insuring things like their homes. Obviously, people are insuring their lives. Obviously, people are insuring their cars. People are insuring things like their pets and the place that they rent out. So there's no shortage of things that you can insure. And being the case, insurance can often cause people to get stressed out, because whether it's they need to get insurance, they need to have something be covered, or they just see the amounts that they're paying in insurance that they can't fully understand why. And so we know that insurance is not something that, when it comes to mind, it comes with positive thoughts. Oftentimes it can be very frustrating and angst-inducing, but I fully believe after this conversation, after this podcast, you will have a different perspective on insurance because of what it can mean for you from a tax perspective. While most people think about it as something that is just paid for either monthly or annually or quarterly or biannually, and it's just an expense that has to be incurred, the wealthy and certain business owners that have applied this strategy in their financial environment, if you will, their financial atmosphere, think of it as a great tool. And the reason being is because it comes with many tax benefits. Whether you're a real estate investor, a business owner, an entrepreneur, an investor of some sorts, we're the type of people that build and hustle and have a vision, and we're going after it. But there comes a time too, we're bleeding, and there are issues in our lives, in our finances, in the way that we're running our business that can cause problems. And part of that is the taxes. We're no stranger to that. People are bleeding when it comes to their taxes. They're spending far more than they need to when it comes to their taxes. Another piece of that would be lawsuits, right? Lawsuits can cause people to go bankrupt. Lawsuits can cause people to just lose focus on the important things of their business because they're dealing with a pesky claim or lawsuit, and that causes them to take their eyes off of what really matters and have to worry about court cases and court appearances and legal fees. But the insurance piece is another part that people might bleed out. People might not be as covered as they need to be, or they might be not using these vehicles the way they could be, right? You could be paying insurance premiums on a regular basis and not know that if you made a few adjustments, you can turn that what is an expense into what can be an asset. And the reason is because insurance is actually one of the more favorable items when it comes to the tax code. Insurance, and specifically the benefits that come from insurance, have serious benefits when it comes to taxes and being able to tap into certain equity tax free. And you've probably heard, if you're in the financial space, about cash value life insurance, infinite banking, being your own bank. And that is a piece of this. And I'm going to cover that. And I know this because as a CPA, when I first got my CPA license and I was working in corporate accounting, working for PwC in Boston, one of the top financial firms, one of the top companies in the entire world, their headquarters was in Boston. That's where I was working out of. We were serving financial institutions, banks, insurance companies, and sometimes real estate investment firms. I found myself largely in the insurance company. And when I was working there, I saw what they were doing. I saw the way that their money was being managed. I saw how they made money, how they spent money, how they grew money. And it began to trigger something like, wow, these people have a lot of investments. I didn't know that these insurance companies invested so much money. These people pay out things called policy loans. What's a policy loan? How does that work? They collect monthly premiums. When somebody dies, they pay a certain amount out, because it was in the life insurance space specifically. I was working for a big life insurance company out in the greater Boston area. And so I started to think about this, and then I started to pair this with my own research, and I found that there's a massive tax benefit for certain income from insurance vehicles. And that's what we're going to get into. We've had clients save tens of thousands of dollars in tax by using their insurance policies as a vehicle and not just a protection tool, right? Many times we think of insurance as, again, we need coverage. We need to make sure our health is insured, because if something happens, we want to make sure that we're covered. We need to make sure our car is insured, because if something happens, we need to make sure we're covered. We need to make sure our life is insured, because if something happens, I want my loved ones to be covered. These are all good things and prudent things and wise things. They take your current situation and they have foresight to say, I don't know if I could cover a totaled car on my own. I don't know if I could cover a hospital bill on my own. I don't know if I could cover my beneficiaries, my wife and my kids on my own if I were to die. I don't know if the amount of money I had right now would cover that. And so we're going to insure ourselves and make sure that we're covered in that regard. But these clients who have done this, they tap into the insurance tax-free, and the income can be used to grow their portfolio. We have one husband and wife client. They've built a sizable net worth and they have real estate investments. They sold a business and they came to us with just concerns around their taxes and how their real estate portfolio and the sale of their business and the way that they were going to manage themselves in retirement was going to be. It's a lot to think about. Any one of those is enough to reach out to us and think about and talk to us and strategize around, but they were dealing with all three. And so what we've worked with them on was they have these insurance vehicles set up. They don't know if they're using them to the best of their ability. They were tapping into it. They were using it, but they weren't using it in the most efficient manner. And as a result of the advice and the partnership that we have with them, we've been able to save them $12,000 in 1 year as a result of using this. They were able to tap into $50,000 of equity in the insurance policy, receive it tax-free, rather than tapping into, say, $50,000 of their retirement account or $50,000 of their earned income or $50,000 of some other cash brokerage accounts, right? And have to pay taxes, capital gains taxes, ordinary income taxes on that net investment income tax. Instead, we tapped into this insurance policy completely tax-free, and they were able to save $12,000 at the 24% tax bracket, and at the 37% tax bracket, that's $18,500, right? So that's no small amount of money. The average person is seeing insurance as a bill, as just a need and something that they have to pay for. But when you think strategically about it, it can be seen as a lever. And this is what people in the cash value life insurance space specifically will talk about. And when I say cash value life insurance, I'm talking about whole life insurance, I'm talking about index universal life insurance, I'm talking about variable universal life insurance. Any one of those can be used as a cash value life insurance policy. It can be a tool to legally lower taxes, to legally mitigate your tax burden and see that tax amount go down, even though you're tapping into more money than you had once imagined. It can insulate you from lawsuits. It can be a way to transfer wealth without having to pay estate taxes and inheritance taxes. So life insurance specifically can be a great vehicle, but there's also another piece of this in the fact that if you're making a certain amount of money, and this is for my big business owners, those who have a sizable business. I'm thinking like you have cash of about $2 million to go and deploy for strategic purposes, right? So this is what we refer to as captive insurance. We covered the cash value life insurance, but now we're going to cover what is known as captive insurance. And this is a much broader and deeper topic than I'm going to get into here. But if this is somebody that is listening to this, that this sounds like something they might be interested in or could possibly take the avenue down, or maybe they just want to learn more about it, then I encourage you to reach out to our team, get on the phone, get an introductory call scheduled. That's completely free and available to you. So for these bigger companies, what they will do is they will form what is known as a captive insurance company. And basically it's a way of self-insuring your company. And so I say $2 million because that's basically what it takes to start this and to cover what is necessary, because not only is insurance a great tax vehicle and can provide massive tax benefits to the person using it properly, but it's also highly regulated. And you need to make sure that it's set up properly, especially when you're getting into these captive insurance strategies. So when somebody goes this avenue of captive insurance, they will self-insure. They will pay a premium from their primary business and get a deduction on that business. So if you pay, say, $2 million in insurance premium, and however much of that is actually the premium versus what you're funding varies, and we refer this out to specialists who set this up properly, but you can get a deduction on the business. And then you have this insurance company that insurance companies have to invest a certain number of their assets. Again, regulation requires them to have a certain number of assets invested, because if you're paying $2 million in premiums, the coverage that equals is much higher than $2 million. And so what the law says is that these insurance companies need to be able to cover the claims that are potentially going to be paid out. And so the company will invest it. And because of the way that insurance companies are set up, they have tax benefits of their own. But then when the company that paid for the premium makes a claim, the insurance benefit is tax-free. And that is what the life insurance can also do. So it's very similar to what we're doing on the cash value life insurance side on a far greater scale. And the difference is that the insurance premium here is deductible, whereas life insurance premiums are not deductible unless in rare cases. And that's one thing for everybody that is using cash value life insurance you have to be aware of, because when people get on to some of these calls and hear about cash value life insurance, whether it's indexed universal life, variable universal life, whole life, it sounds very appealing. You can hear about all the tax benefits, but what is rarely said as a potential downfall is that this premium is not deductible. And so people will pay for it out of their business bank accounts. It'll be on their records. And then the tax preparer, when they go to prepare it, will have to add that back as income, and it will increase the tax burden or the expected tax burden that you might have had. And we've seen this come up in issues with clients and prospects, is that they have this massive insurance premium for life insurance on their books, but we have to actually add it back, and it results in a larger tax burden than we would have liked to see. So the point here is that the tax code has very specific guidelines and regulations and principles for insurance of all aspects. One of the pieces of insurance that is clearly stated in the tax code is that insurance benefits are tax-free. So because of the way insurance is classified in the tax code, we can tap into things like the cash value life insurance or the captive insurance companies that we might set up and receive the money tax-free when it's done properly. But there are issues. There are things that you need to be aware of. That client that I said was able to tap into that $50,000 completely tax-free. Had they not had us to guide them and show them, okay, yes, you can do this, and this is how we're going to report it on your taxes and in your record keeping to make sure that you are truly receiving the tax benefits. Because we've seen people take $50,000, for example, out of their insurance policy, and then it gets recorded as income on their books. And if you're not working with somebody who's working with you on a regular basis and throughout the year and knows exactly what's going on in your business, because you're meeting regularly and they're reviewing your books and you know what's going on, well, then somebody can see that you made, say, $300,000 in income on your record keeping, but if $50,000 of that is not taxable because it's an insurance policy, but they don't know that, then you're going to get taxed on money that you weren't supposed to be taxed on. And the IRS is not going to tell you that that's the case, because they see that you just reported $300,000 of income and they don't really care if it was taxable or tax-free. If you were reporting $300,000, they want you paying taxes on $300,000. So here's the thing. We don't need to be these large conglomerates to make use of insurance. We can be. And again, if you are somebody who has a sizable business and that captive insurance strategy might be something that you are interested in or want to hear more about, we'll gladly talk to you. But for those of you who aren't at that level yet, don't be discouraged. Like, you can still make use of this insurance aspect and benefit out of the insurance, even the insurance that you're currently paying. It doesn't have to be life insurance. We've saved people thousands of dollars in the way that they tap into their home insurance and the property insurance that they have on their real estate investments when things go wrong and they have to get a benefit paid out. Again, insurance benefits are tax-free, but you have to make sure you're doing it correctly. So whether you want to make use of cash value life insurance and make sure that you're getting the right tax benefits, whether you want to make use of captive insurance, or whether you are receiving insurance benefits because of, say, a claim that you filed, but you're not sure if it's getting reported correctly, or you are worried that you might end up paying taxes on it, or you're not sure how much of it is taxable or tax-free, then I would encourage you to reach out and make sure things are running correctly. We can rethink the way that we see insurance. It is a line item. It is an expense. We have to incur it because we want to make sure that the things we care about and the people we care about are covered. However, if we can escalate our thinking a bit and see insurance as a potential tool as well, that is how we can really change the game for our tax strategy. Because again, it's not just you, it's not just the cash value life insurance that you can tap into, it's not just the captive insurance, but it also changes your generations. It changes those who are beneficiaries, because if you set it up properly, they will be able to inherit certain aspects of this when you pass on completely tax-free. So I would encourage you to ask your CPA about advanced insurance strategies if they don't know about it or they seem a little hesitant, because again, not everybody has positive thoughts about cash value life insurance, indexed universal life insurance, whole life insurance, variable universal life insurance. Then I would reach out to somebody who does consider it when they're strategizing proactively with their clients, because it is a tool. It's not for everybody. None of these strategies are for everybody, but for a lot of people, especially those who are in the real estate space and building up a net worth and want to leave their children with something, and also want to tap into some of their equity completely tax-free and see things grow without the threat of capital gains taxes, then this is for you. You can be like our clients who are saving $12,000 to $18,000 every year as a result of using this and tapping into it strategically. Until next time, God bless you and keep moving forward.